Oil prices surged more than 6% on Wednesday, reaching their highest level in 2 weeks after US President Donald Trump said the memorandum of understanding aimed at ending the conflict with Iran was over, raising fresh concerns over disruptions to oil supplies from the Middle East.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over.
Brent crude rose 6.16% to $78.73 a barrel, while US West Texas Intermediate crude gained 6.01% to $74.67 a barrel. Both benchmark prices reached their highest level since June 22nd, after already climbing around 3% on Tuesday, when the United States revoked the general license that had allowed the sale of Iranian crude. The agreement had been brokered by Pakistan last month, providing a 60-day window for negotiations, but came under pressure after the United States carried out fresh strikes on Iran. Analysts say the latest developments have forced markets to once again factor in the risk of renewed attacks on shipping and a broader deterioration in US-Iran relations, which could disrupt oil flows through the Strait of Hormuz. According to US Central Command, the latest American airstrikes were launched in response to Iranian attacks on 3 commercial vessels transiting the Strait of Hormuz. Iran's Revolutionary Guards later said they targeted US military sites in Bahrain and Kuwait early on Wednesday. The renewed exchange of attacks has intensified concerns over tanker traffic through the Strait of Hormuz, a vital shipping route that carried around 1/5 of the world's energy supply before the conflict began in late February. Analysts warn that Trump's announcement has raised the possibility of the strait being closed again as tensions escalate. Ship tracking data also show that at least 4 oil and gas tankers turned back instead of passing through the waterway, as fresh attacks on vessels heightened safety concerns. Market analysts said the underlying supply challenge remains unresolved, and the latest escalation has interrupted the recovery that followed last month's truce between the United States and Iran. After that agreement was signed, oil prices had fallen to pre-war levels and traders had built up on oil futures, expecting prices to decline further. Since the conflict began, countries have been drawing down their oil inventories to offset supply shortages. One commodities analyst said a price floor to $80 a barrel better reflects current market fundamentals than $70. Meanwhile, trade sources said China has lifted refined fuel exports restrictions for the remainder of July and has allowed a private refiner to resume fuel shipments after a 4-month suspension, as the world's largest refiner moves towards normal operations following disruptions caused by the Iran conflict.